Thank you for joining us for this thought leadership session, Dynamic Africa, a New Reality. Joining me on the panel, Minister Rob Davies, the Minister of Trade and Industry, South Africa, Brian Molefe, the CEO of Transnet, and Maria Ramos, Group CEO of the ABSA Group. Thank you so much for your time. Let's start, as the Minister, the Finance Minister, put it so eloquently, in terms of looking at structural balances between short-term profits and long-term commitments. Brian, I'm going to open to you at this stage.
I think the big problem in Africa, as we know, is infrastructure. Now, the question really that needs to be answered is how infrastructure is going to be deployed, whether we're going to follow demand, which is establish where infrastructure is required for manufacturing and so on, or lay out the infrastructure and hope that investment will follow the infrastructure. That is going to be a big question in Africa. But financiers, the people who are going to finance the infrastructure, are going to want to be satisfied that there is a demand in the first place, in short term and in the long term, for them to finance infrastructure, so that they can reasonably calculate how it's going to be repaid. And so it does appear that we're going to have to increasingly follow policies in the short term and in the long term that promote manufacturing, so that we can attract infrastructure, because the way to finance it is going to be by proving that there is demand for such infrastructure. And if there isn't, there's going to be a problem in financing the infrastructure.
Minister Gordon not only mentioned short-term profits, but also short-term politics and how those work together with long-term commitments. Perhaps I can get your comments on that front.
Well, I think that the importance of African growth at the moment is that it creates an opportunity for us to go into sustained development. If we look at what has driven African growth over the last decade or so, it's been about 25% of it has been a mineral products boom, which I don't think we can count on sustaining itself over the next decade. All the signs are that many mineral prices are beginning to go downwards. Then we've had a consumption-driven boom, things like ICT infrastructure, which has come in but not manufactured in our continent. Then we've had the absence of a systemic financial crisis or a sovereign debt crisis, which I think has been very welcome. And the last thing is we've had the opportunities of better economic governance and also of some infrastructure development. But the long-term challenge is to create much more value-added production and to industrialize our continent. I think you'll hear that ambition coming from many, many leaders across the African continent. And that requires that we integrate our continent, because our domestic markets are just too small. And one of the big initiatives is the tripartite free trade agreement, which has now reached the point where I think we understand very clearly what the negotiations will entail. And this year we'll see exchanges of offers and requests, and the negotiations at the level of detail which an FTA negotiation needs to reach. And then the other side of it is the infrastructure. And I think the long and the short term thing is that there has been infrastructure development on the continent largely to support the mineral products export, to move mining products from the mine to the port and then out of the region. What we haven't had is the infrastructure which connects up our economies and creates the basis for us to trade increasingly among ourselves. That's the long-term infrastructure. That's the one that's going to need the challenges. That's the one that I think we need to demonstrate the theme here at Davos, resilient dynamism. If I understand it, it means that we have to keep our eye on the long-term ball. We have to confront short-term challenges, but we need not to be deflected by those short-term challenges and abandon the long-term goal. And I think the long-term goals have been well defined. We need to advance with them. I think we are advancing with them, and I think that's the basis of optimism about the African continent.
Minister, you bring up the infrastructure deficit. It's well documented. Maria, I'm going to throw it forward to you on this one. African Development Bank says $93 billion needed annually to 2020 to close that infrastructure gap. In terms of increasing our existing financing mechanisms, we're not going to be able to close that deficit. We need more innovative solutions. And with a banking voice, perhaps you can lead that discussion.
Well, I think that we do need more innovative solutions, and I think we must also recognize that there are a lot of those solutions coming to the market as we speak. So there is a big gap, there's a big deficit, but we've also seen a significant increase in infrastructure funding out there. I think of the financing you're talking about, we are now seeing about, I think, around 45 to $50 billion of that being financed on an annual basis. And what's really exciting is that we're seeing more and more of that being financed in Africa, in African capital markets. Still from a pretty low base, but often when we talk about infrastructure, we just talk about the kind of infrastructure that Brian runs. And I think that infrastructure is fundamentally important, but I think the other infrastructure we're starting to see develop in Africa is financial infrastructure. 10, 15 years ago, there were 3 countries in Africa, 20 years ago, there were 3 countries in Africa that had credit ratings that could really access capital markets. Today, half the countries on the continent actually have credit ratings. They can access global capital markets. We saw Zambia go to market the other day and raise 10-year money actually just below the southern European countries. And so things are changing. That financing is there. We can put the deals together and we can get the right mechanisms, the right instruments, the innovative instruments in place to do that financing. It does require a number of players to come to the table. So it requires the financial institutions, it requires the development of domestic debt and equity markets, but it also requires that we have greater certainty in some cases of the legal environment, the tariff regimes, for example, when it comes to the financing of power, to the financing of alternative energy. Those are the kinds of things that I think that if we get right, if we get certainty, if we understand how it's going to get done, I think we can get the financing done. And Minister Davies spoke about intra-Africa trade and the opening and getting the regional issues sorted out. Those are also fundamental. A lot of the infrastructure projects go across borders, and they need to go across borders. So getting those cross-border issues sorted out will also go a very long way to ensuring that we've got the financing instruments that then match the requirements on the ground.
The big theme, we're going to discuss a little later, is that intra-Africa trade. Brian, in terms of upgrading infrastructure, Transnet currently spending 110 billion rand. Can you take us through your 4-point plan?
It's a little bit over 110. It's about 300 over 7 years.
The stats, well, there I put firmly in my place. Never believe the internet.
Yes. Yes, we are spending 300 billion over the next 7 years. Now 6 years because the year is ending in March, the first year. And the government as a whole has a big program with a strategic investment program to spend on infrastructure. But as Transnet, we will be spending 2/3 of that money on our rail infrastructure and on the ports infrastructure, as well as the finalization of the pipeline from Durban to Johannesburg. And that is where the bulk of the money will be going. We'll be upgrading our fleet of locomotives, we'll be upgrading our fleet of our cranes at the ports, which is quite old, improving the ship turnaround times at the ports, and improving the speed and reliance of rail to transport goods in South Africa. And we are already beginning to see benefits of that after the first year, which we will report on when we announce our results in 2 months' time.
Minister, coming back to the infrastructure gap, if we close that gap, the stats out there are that we will add 2% to African GDP. Now, if we're forecasting 5.5% for 2013, that really pushes up the numbers. Intra-Africa trade, as Maria mentioned, is key to that strategy and closing that gap. It also insulates us from another global financial crisis, and we know over 2008, 2009, when the global financial crisis hit, as Minister Gordon pointed out, we were impacted. The economic growth on the continent fell to between 2 and 3%. If we insulate ourselves through intra-Africa trade, isn't that the key? Resilient dynamism.
Well, I think that if we look at successful emerging economies, if we look at our fellow BRICS countries, China, India, and Brazil, they've all got a second leg, which I think in this phase they turn into increasingly as a source of growth in the next period. And that is a sizable domestic market. So China's earlier phase of growth was exports to the United States and the European Union. And now I think it's beginning to see that it needs to develop its own internal market. Now the problem is that China was not divided, as the African continent was, into 54 different countries under colonialism. And even the biggest of us does not have a sizable enough domestic market to be a real basis for economic transformation. I think that's the logic behind which, in fact, what we are trying to achieve is not so much a deepening of integration within our existing regional communities, but a broadening of integration across our regional economic communities. So the SADC East African Community COMESA FTA will be 500 to 600 million people, a combined GDP of $1 trillion US, and then the AU has added the next phase, which is under discussion, which would be an all-African FTA. So I think
that would incorporate the West African region.
West Africa, North Africa, and that would give us the sort of basis on which we can begin through trade. But trade alone is not going to crack it. We can begin to create the sort of markets that will enable many of us to begin to realize the benefits of industrialization. Now that doesn't mean we're cutting ourselves off from the rest of the world or anything like that, but it does mean that it is creating a real opportunity for industrialization across our continent. But I think the infrastructure is quite key, because if we actually do look at what are the barriers to intra-regional trade, they're not actually fundamentally tariffs. It's not that there's a high tariff in Uganda that stops us trading with Uganda. It's much more to do with the infrastructure deficit. Just on the financing of the infrastructure, I think it's worth mentioning that the BRICS countries took an important decision to conduct a feasibility study about a BRICS-led development bank. We are looking forward to a very substantial and significant decision on that being taken at the BRICS summit, which we'll be hosting in Durban. And I think that one of the possibilities and opportunities here is that we have capital surplus countries which have invested their capital in the developed world, where the returns are extremely low. And here are some real opportunities on the African continent. I think that could be a substantial and significant contribution to solving some of the infrastructure financing gap as well. Not the only thing, but it could be an important contribution.